I've spent the last 10 years investigating how the super rich invest. This was my full-time job as a banking journalist. Today, I'm going to share 3 secrets about how rich people invest, those stuff that middle class don't know. I will also share the practical and actionable tips on what and how you can learn from them. If you're new to my channel, I'm Charlene. I'm a chartered financial analyst. I make videos on investing for beginners and personal finance. Do like and subscribe so you won't miss any upcoming content like this. Here's the deal. When most of us think about spreading our investments, we're looking at different stocks or maybe a couple of sectors. Tech, healthcare, energy, for example. But here's the secret sauce of the rich. They play the game on a whole other level. We're talking about spreading their money all over the place, not just in different stocks, but in things like equity, bonds, ETFs, mutual fund, private equity, private debt, cryptocurrency, for example, Bitcoins, Ethereum, even art, wine, or even watches. And they're putting their money in different currencies, dollars, pounds, euros, yen, you name it. Plus, they're investing all around the world, North America, Europe, Asia, or even South America, hitting both what we call in finance, developed markets and emerging markets. So after hanging out in the private banking world, I get asked a lot, "Oh, Charlene, you deal with rich people. What's their secret? Do they know something that we don't know?" Sure, they might get into some fancy investments with a high ticket size that most of us maybe cannot touch. But their big trick isn't about those mysterious investments. It's all about spreading their investments far and wide across different types of investments, currencies, and places. And now you might be wondering, "Hey, Charlene, what about me? I don't have a lot of cash to throw around. I can only probably grab a few shares here and there." Here's the great news. You can still play the diversification game. Have you ever heard of ETFs? They're like stocks, but when you buy a share, you're actually buying a piece of a whole bunch of different stocks or bonds or both. And mutual funds. They are similar to ETFs because they let you invest in a big mix with just one purchase. If you're curious about diving deeper, check out my video where I compare ETF, mutual funds, and index funds. I laid out all the pros and cons so you will get a full picture. Video links here, also in the description area. Alright, let's dive into another secret of the rich that is not about where to invest, but how to keep more of what you can earn from those investments. Getting tax smart. You see, when we pocket a little extra from our investments, we're just happy to see any kind of return. But the rich, they're playing chess with their money, especially when it comes to tax. They use accounts that offer tax advantages where your money can grow tax-free, or you pay tax later. And once I had dinner with a couple of private bankers from the finance world, I heard about how one investor used charitable donations to offset some capital gain tax. They donated shares of stock that had gone up in value to a charity, avoiding the capital gain tax they would have paid if they sold the shares. And they still go to, write off the donation. Talk about a win-win situation. And it's not just about picking the right account or making donations. The wealthy are super careful about how they sell their investments. They know all about tax loss harvesting, selling investments that are down to offset the taxes on the gains. It's like making lemonade out of lemons, tax style. And now you might be thinking, "But Charlene, all this tax stuff sounds complicated and I don't have a fancy accountant or tax advisor." Here's the thing. You don't need to be a tax expert to start getting smart with your tax. And there are plenty of tools and resources out there to help you get started. Plus, a little bit of planning now can save you a lot in the long run. For example, even if you're just investing in stocks or mutual funds, paying attention to when you buy it and sell can make a difference in your tax bill. Selling a stock after holding it for more than a year, for instance, in some countries, it means you will pay a lower tax rate on any gains. So don't just focus on making money, think about keeping it too. Being tax smart is a big part of the game. If you want the full scoop on getting started with tax-efficient investing, don't miss my next video on these 5 investments will reduce your tax immediately. Okay, and now let's shift gears and chat about something that may not sound as exciting as making money, but is even more important: keeping the money safe. This is where the rich really set themselves apart, not just growing their wealth, but preserving it. For most of us, the thrill is in the chase. We're looking for that next stock that is going to skyrocket, dreaming of turning our modest investments into a fortune overnight. But here's the little inside scoop from my days hanging around with those rich people who are already making their fortunes. They're not chasing the next big thing. Instead, they're making sure they don't lose what they've already got. Let's just face it, 99% of those multimillionaires or billionaires, they become rich because of their own businesses or because of their family heritage, instead of because of great investment decisions they make in the stock market. And here's the story that sticks with me. I once met an investor who had made a huge amount of money in tech stocks, and instead of putting that cash back into the market looking for the next big win, he diversified. He put money into bonds, real estate, even some into art and collectibles. And why? Because he knew that tech stocks could be volatile, and he wanted something solid to hold on to if things went wrong. He was playing defense with his portfolio, making sure he had a cushion to fall back on. And here's the kicker. He also put a lot into trusts and other structures that could protect his assets from lawsuits or creditors. It's not the most glamorous side of wealth, I know, but it's crucial. He told me, Charlene, it's not just about making money, it's about keeping it. That means protecting it from every angle. And now I hear you asking, Charlene, I'm not at the point where I need to worry about trusts or all that jazz. What about me? Well, here's the thing. Wealth preservation starts with the mindset. Even if you're just beginning to build your wealth, being cautious about where you can put in your money is key. It's about balancing the desire to grow your wealth with the need to protect it. That means 1, diversifying, 2, having a safety net. And an emergency fund, for example, isn't as exciting as investing in stocks, but it's your first thing that you need to do before investing. And remember, insurance is also your friend. Whether it's renter's insurance, health insurance, or even life insurance, think of it as part of your wealth preservation strategy. I'm not asking you to over-insure yourself. Myself, I really hate those insurance agents who keep selling me stuff that I don't need. But those basic ones like health insurance, life insurance, if your company, they don't buy this for you, I think you'd better have it. And if you enjoy this video, you will definitely like my video on 3 things you need to do before you start to invest in stocks and how to start investing for beginners in 2024, a step-by-step tutorial for you. And if you find the video helpful, please do like, subscribe, and turn on the notification bell, and I will see you in the next video.